the Aussie. Well, let's get some more on all of that, and we're joined now by Chris Weston from IG in Melbourne. Chris, great to see you. Yeah, another night of gains there. What was buoying markets? Was it all to do with the Moody's story and the fact that those 10-year Spanish bond yields really came down to lows not seen since April?
Yeah, I think that was a major contributor. I mean, I think the Spanish situation is really up in the air at the moment. We've got these reports coming out that a Spanish request is going to be likely in the next few weeks. You know, that's on top of the recent reports about a potential tap for a precautionary credit line as well. I think a Spanish official came out last night and said that their stance hasn't actually changed, and it's kind of poured some cold water on that side of things, and a request is not imminent. And in fact, I suppose you can make an argument as well that the fact that Moody's haven't cut them to junk removes a short-term catalyst for Spain to come and tap the request for assistance as well. So really still very confusing, but I think the market seems to be guessing that a request for the OM2 assistance is going to be coming sooner rather than later, mixed in with the precautionary credit lines as well. So I think the Spanish debt was very well bid last night. I mean, if you look at the 2-year, which is where most of the US hedge funds have been buying at the moment, that was down, what, 35 basis points? You know, we're just down to that sort of 277 level. We're just eyes on the 271 level that we traded down to in September. So, yeah, really good moves in the Spanish debt market, and clearly that gave people a license to bid up the euro and more so even in the Australian dollar, which I think was really helped out by some comments from Premier Wen, which came out the back of yesterday, saying that, again, just that the Chinese economy has stabilised. These are views now which is being shared by most in the equity market. Xinhua, who's one of the big Chinese newspapers as well, coming out saying that it's going to stabilise. I actually think we're going to see a big rebound in the Chinese economy going into the fourth quarter now. We've heard good leading indicators on that. Plus, you can mix in the earnings that we're seeing in the US now. If you strip out IBM, which obviously fell over 5%, you know, most of the earnings we've been seeing have been very good. And I think if you look at the forward indicators, what we're expecting for the fourth quarter now, you know, the earnings growth is markedly higher than what was expected at the beginning of October as well. So the outlook statements have been actually okay, and we've actually seen EPS revisions to the upside there. The housing data, which you spoke about, was significant. I mean, 13% above the consensus on the housing starts. The building approval, building permits numbers, about 11-12% above the expectations. You can clearly see names like Pulte Homes, 52-week highs at the moment. They're reacting to some of the comments from JP Morgan's Jamie Dimon as well, that the housing market has turned a corner. So, warming to what we're seeing in Europe. Greece is likely to, by all accounts, it looks like Greece is actually going to receive its or get full. They've actually made an agreement there on a staff level, and we should hear more in the coming days about, you know, Greece's next tranche of aid. And that looks like, you know, if you're a betting man or woman, then you'd probably say that Greece is going to remain in the European Monetary Union for some time to come. So I think if you put all those situations into play, you've got yourself a good risk rally. Certainly the Australian dollar pushing up to 103.86 or so. So that's been on an absolute tear at the moment. Risk is really well bid at the moment. The only thing I'd probably suggest now is I wouldn't be looking to chase it, unless, certainly in the currency market, and I'd now be looking to wait and potentially buy a dip, because you know, I think we've had a very good run, and I think we're going to see a bit of profit taking in the next sort of 24 hours. But yeah, I wouldn't be looking at the Dow. You know, the Dow obviously influenced by what we saw with IBM. That's why I always look at the S&P over the Dow. 80 points coming out because of IBM's result. It's about what the S&P did last night, and that closed up 0.4%.
Yeah, and now it's, what, 1/3% below the year high hit back in, or its closing high for the year, certainly. Do you find that strange? I mean, is it surprising to you that the US equity market is doing so well, considering there's this huge risk event of the US presidential election and that fiscal cliff, and still the unknowns out of Europe?
Oh, I think so. I mean, I think if you actually look at things from a different perspective, Bridie, if you look at the Dow transports against the Dow Industrials, the Dow Transports obviously very leveraged the US economy. You know, names like UPS and FedEx, that's been really sort of trending slightly lower, whereas the Dow Industrials, the one that everyone talks about, is actually been trending higher. And clearly, I think, you know, Ben Bernanke's done a very good job at separating economic reality from you know, where the stock market is. Although I'd say the last week the economic data in the US has actually been very good, with industrial production numbers, jobless claims, retail sales all coming out better than expected. But yeah, I think what we're seeing, I mean, people are really, I think people's base case at the moment is they're suggesting that you know, Obama's probably going to get in again. We're going to see status quo being kept on hold at, in terms of a congressional level, you know, with the Republicans keeping the House and the Democrats potentially retaining the Senate. So that seems to be most people's base case at the moment. And I think most people suggest that the fiscal cliff will get sorted out at the last minute, although it's going to be very, very tight. The downside implications are quite significant. We could push the US into recession if that doesn't go through. But at the end of the day, I mean, there's going to be a clear game of brinkmanship going on between the Democrats and the Republicans. But if you're the party ultimately that didn't want to concede, you're going to have blood on your hands. You're going to be the one responsible for the US going into recession and potentially losing its credit rating or seeing another credit rating downgrade as well. And that could play very badly into the PR side of things further down the line as well. So that's why I think most people think that the fiscal cliff will get resolved.
So looking at our market today, the ASX 200, we hit that 15-month high yesterday, very good gains. Although, obviously, we were reacting to the Moody's Spanish debt news. So what are you expecting for the open today and the way that the market might move today?
Yeah, I mean, the bulls are in control here. There's no doubt about that right now. I mean, we're seeing that in the sector rotation, which is, you know, clear signs of a healthy market. I mean, from a sector level, of which, of course, in the material space, BHP is the largest, obviously, dominant force there. The materials haven't really taken part. I mean, some of the mid-caps have done quite well, but in the last 5 days, the material sector's, you know, down a touch, and on a monthly basis, it's down a touch as well. So, you know, I think this is where materials really start to come into their own. I mean, BHP today is going to be up about 2.5% on open. The iron ore price up another 2.5% overnight. So, yeah, I think this is the space that you need to be overweight on at the moment. You know, as I say, I think we're seeing clear signs, and we've been seeing clear signs that Asia and emerging markets is stabilising now. You know, with the export numbers across Korea, Taiwan, China, the money supply numbers in China very, very strong as well. This is the space I think you need to be overweight, and I think today's GDP numbers out of China will be very interesting as well. Premier Wen, as I said, came out with some very compelling comments yesterday that he sees the third quarter in a better space. So perhaps there's upside risk to that 7.4% consensus number today. And I think, you know, it's all about what's happening in the fourth quarter, which a lot of early signs are that we're going to see a technical rebound. So I think you want to be overweight the material space, and I think this is going to be the space that does very well today. Fortescue had a big gain yesterday. You know, some of the mid-caps doing very, very well. It's going to be interesting to see what happens with the banks. They are looking a little bit stretched on a fundamental and slight technical level as well. But, you know, we're going to see a good gain on open today, and I certainly wouldn't be looking to sell into this rally today. We'll have to see, obviously, what happens with the Chinese data, but obviously we're hoping it's going to be, you know, relatively compelling. The other thing you've got to look at is the property prices. Everyone's talking about industrial production. Everyone's talking about the fixed asset investment level. But let's look at the thing that the PBOC are still really compelled to sit on their hands while they're not doing this aggressive monetary stimulus, monetary policy changes, is because they're still concerned with property prices. So property prices, the September property prices come out at 12:30, just slightly earlier than the data dump. We'd actually like to see those property prices coming off, because that's what the PBOC want to see as well. So, you know, if we see a nice move back down in property prices, it gives I suppose it gives the PBOC more scope to stimulate. So that's another thing that we've got to look out for today. But it's going to be an action-packed day with, you know, a number of corporates coming out as well.
Yeah, absolutely. Bank of Queensland, Woolworths quarterly sales, 10 network full results here. Lots on. We might get your views on all of that a little later in First Business and Trading Day. Chris, really appreciate your time. Thank you so much.
Cheers, Brody.
Chris Weston from IG there. Well, Julia Gillard is on her way home.